Hi, everybody. Welcome back to the second segment, episode 178, Sold with Updike Pugh. I'm Jeff Updike.
I'm Weston Pugh, and today we are going to talk about mortgage rates. And it is so important because things are really changing with the Fed right now.
They really are. And just to be clear, the Fed changing their rate does not directly affect mortgage rates. It's not as though they are changing mortgage rates. Mortgage rates are influenced by that. Mortgage rates are really set on the are really a negotiable term with mortgage companies. So not everybody offers the same interest rate, not everybody offers the same closing costs, and but that Fed rate does influence how mortgage rates behave.
And they're also not a one-to-one. So if it goes up a quarter point on the Fed, that doesn't mean mortgages are automatically going to go up a quarter point. And that Fed also, that adjustment in their loan lending also affects student loans, credit cards. So it's not just the mortgage that it's at play.
Right. The federal rate is really setting the overnight rate with the federal bank.
Yep.
And then everybody else, sends their money through the central bank, and it all gets influenced that way.
So if this market wasn't fast enough, Jeff.
I know. I'm looking for my two sheets.
Okay, well, let's share them right here.
Okay.
I'm going to move them over here,
Okay.
and we'll talk about number one.
Okay. So the first one, the first slide that we wanted to look at is the monthly mortgage payment for a conventional loan by home price and mortgage interest rate. And this is a chart that has come from the Texas A&M Real Estate Research Center that always provides really good basic data. So I don't want to go through every line on this, but let's just look at a $200,000 home price. So as you read across, if the interest rate is at 2.5%, the monthly payment is about $12.99 a month. And as you see interest rates rise, you see what that effect on them is. Most of our interest rates now, I think, are off of this chart. What we're hearing is off this chart. They're going to be 5 in the 6s. But if you went from just compared the 2.5 where we were 5 months ago to the 4.25 all the way at the other end, you see that there's about $155 a month difference, which is not a tremendous number, but it is a significant number, I feel.
The other thing that it does is this also affects your debt to income and how much you can have, because with the payment, when it gets calculated in, I believe these tables were made, as I was reading in the article, based on a 20% debt to income ratio.
30% debt
30%,
to
I'm sorry.
yeah,
Yep.
20% down, 30% debt to income.
So it's very interesting that as your mortgage rate goes up and your salary stays the same, your debt to income goes up, and it does lid you.
Yes, and it does roll into the pricing also, because lenders don't really offer one rate anymore. The way that they offer their mortgage rates is through layering of risk. So if you're putting less than 20% down, that's a little layer of risk, so you'll pay a little higher interest rate for it. If your debt to income ratio is at the peak, at the highest it can be, that is going to be another layer of risk. Therefore, you're going to pay a higher interest rate, like Weston was saying.
If it's not your primary residence.
If it's a secondary home, that's going to be affected by it. It also affects your closing costs on the secondary home too. So, it has an impact on it. And while it's not huge and horrible, if you're someone who is really stretching your budget to get into a certain price point, as interest rates change, that can push you out of that price point.
Yep. And in the next slide, what we're going to take a look at is income required for conventional loans. And you can see this begins to shift as well as interest rate comes up.
So if we go back and look at that $200,000 price point again, for a mortgage at 2.5%, at a $200,000 home price, your gross family income needs to be $51,954 a year to qualify for that. Now, again, this is at a 30% debt to income ratio. You do have a little bit more flexibility there, but we just wanted to show for comparison, like going all the way across to 4.25, you have to make almost $7,000 more per year to qualify for that same mortgage.
Which again shrinks the number of homes that actually are something that you can qualify for. So that's why it's very interesting, like Jeff and I are working with clients, and we're seeing this begin to bubble up and become a reality on the horizon, that paying and getting that house now in the long run is going to make a huge savings for you. If you have to pay a little more now, or if they didn't do all the repairs that you wanted, that it's okay because you're locking your interest rate today versus in 6 months. Because I believe in that article, it also said that the Fed has the potential to raise interest rates 7 times this year.
Yeah, I think they're meeting again the beginning of this month, and they've already said there's going to be another price increase at this meeting.
So that is a lot, and it is something to keep into consideration. I think that there could have been the other thing too, if you're not familiar with it, is an amortization schedule. And I think an amortization schedule is frightening as hell, but I think it's interesting to look at it and see what happens at 3% versus 5% over the life of the loan. What that does is it actually shows you that a $200,000 home, after 30 years and paying on it at 3% versus 5%, there's a substantial, probably $100,000 difference.
Yeah.
So backing up to what I said, those repairs for $500 or $2,000 really are not that big of a deal. Get that house.
I would agree. One of the other things that we wanted to just mention in our second segment, 2 things actually. One is that on May 7th there is an election going on, and that's the constitutional amendments there are 2 constitutional amendments that voters are voting on, and both of them are really important when it comes to home ownership. One is affects people that have an over 65 exemption on their property and how long they can leave that, or the lockdown rate that they get with that 65 plus exemption. The second one I think is even more important because it is going to increase the state homestead exemption for your school taxes from $25,000 to $40,000, and that means that when you're calculating your home taxes on your primary residence, you will get to take $40,000 off of the value that you don't pay taxes on, rather than just the 25. So it's a pretty significant number.
It's a win.
On that.
It's a win. Every penny counts when it comes to home ownership.
It really does. Those are 2 of the things that I think our legislature did well this year. One of the other things that they did is they have changed a lot of the rules and laws when it comes to homeowners associations. I feel like homeowners associations got really way out of whack with the rights and responsibilities and things that they were doing. And, for a long time, they just kind of ran without really having any rules in place.
Yep.
So if you had a homeowners association that was not being run well, or you had people volunteering that were, not good stewards of it, it made it not fun living there.
Oh, we have clients right now with that.
Yeah, but there are a lot of changes that were made that are really giving power back to the homeowner, and I think this goes into effect instantly, if I'm not mistaken. Yeah, this has already gone into effect. So
great.
It shortens the amount of time for you to get your documents from them. It raises the penalties, like if a homeowners association doesn't provide requested documents within 5 days of the second request, the penalty goes from $500 to $5,000.
I like that.
So, yeah, putting some real teeth in making homeowners associations respond. Many people look at homeowners associations as those people over there that run it, and it's really not. When you own in a homeowners association, you are the homeowners association. And so go to your meetings, get involved. Yes, it's a thankless job to be on the board or to be the president of it, but it's how you get things done in your community.
100%. Staying active, staying aware is critical when it comes to homeownership as well.
It really is. So I hope this has been helpful to you. I hope you found some interest in it. If you've got other topics you'd like for us to talk about, please just put them in the comments. We'll be happy to address those.
And just remember, we want to be your realtors for life.